Okay, for the second part of problem 1, we're asked to prepare a contribution margin income statement in proper form, and I hope my form is the proper form. This is your textbook, and this is on page 38, but you have a custom book, so it may be a different page. But the contribution margin format is right over here, right? So we're going to take sales, we're going to subtract variable costs to arrive at contribution margin, then we're going to subtract fixed costs to arrive at net operating income. And that's what I've done here. So I've taken Kelly's, I guess I'm missing an S there, Kelly's Kayak Adventures contribution margin income statement, month ended July 31st, we don't know the year. And I'm going to have sales. I'm going to subtract our variable expenses, which I've already figured out are wages, administrative costs, and overhead costs. That's going to give me contribution margin. Then I'm going to subtract fixed expenses, and the fixed part of admin, the fixed part of overhead, the fixed part of selling, to arrive at net operating income. Okay, so let's do this. It's going to be a little bit of up and down, back and forth. You probably have numbers handy, but I'm going to have to go up and down to show you these things. So our revenue, our sales revenue is going to be our the number of guests we've served times the price each guest pays. So 4,800 times $150. That's going to give us sales of $720,000. Our variable expense, there's several, so let's go up and kind of work through these. Okay, the first one we encounter is wages. We paid a raft guide $75 per trip, and there's 600 trips in July. So 75 times 600 is 4,500. Now I'm going to indent these because I'm going to subtotal all of the expenses and then, total expenses and then carry it over. Again, that's following the format that you see here. So when we have a list of items, we're going to subtotal those and carry them over. All right. The next item, just working our way down, is our administrative cost. Now this is based on the number information we have from the prior calculation, which we've already figured out is, we know the variable cost is $35 per guest. So we had 4,800 guests. It's $3,500. Granted, it's a mixed cost, but we're just looking at the variable piece, which is the 35. So 35 times 4,800 is 1,068. And finally, our overhead costs for the month was $200,000. It tells us it's 50% variable and 50% fixed. So we know that's 100,000 variable. I carry that over and I get $313,000 of variable cost, which gives me a contribution margin. When I subtract 720 from 313, I get 407,000 of contribution margin. Now I'm going to see what my fixed costs are. So I'm going to scroll back up here again, and remember the administrative cost was $35 per guest plus 230 of fixed costs. So we know administrative fixed cost is 230. Again, I've got a list, so I'm going to total them and then carry it over. My overhead costs are again 50% was variable, so 50% was fixed. So that's another 100,000. And then we have this goofy little one here. The last thing we haven't checked off, 5,000. Selling costs. A lot of times selling costs are variable, but in this case, if it's telling us it's 5,000 per month, Well, that implies that it's fixed because it's a fixed amount each month. So we total those. That gives us 335,000. So 407 of contribution margin minus 335,000 of fixed costs gives us net net operating income of 72,000.